What's up, guys, and welcome to episode 2 of our challenge, which the title is simple: Trading Till Payout Challenge. On this challenge, just as the title says it all, our goal is going to be to trade on a funded account until we get a payout. On our episode 1, we actually purchased the account and we're waiting for our account credentials. If you can check on this screenshot, our account credentials just arrived, and we're going to be going to episode 2, where on episode 2, you guys are going to see me logging into MetaTrader 5. You're going to also see me analyzing the trade, and you guys will see me placing the first trade or the first couple of trades on this particular challenge. The goal is simple. We're going to stick to our strategy, meaning either good or bad, we're going to still document everything. And from the first to the last trade on this particular challenge, I'm going to be documenting everything to show you guys what goes on in my mind as a 10-year experienced Forex trading millionaire, how I trade on a daily basis, and how you can do the same. So without taking much of your time, come with me on episode 2. Let's log into our MetaTrader 5, do our analysis, and start taking our trades on this particular challenge. And make sure you stick to the end of the video. And if you're watching this for the first time, make sure you smash that subscribe button to subscribe to the channel. And if you like this series, leave a thumb up on the video, and see you on the inside. If you can check this email right here, those are our phase 2 details. So we are good to go. That's the account number. There's nothing to hide. Meaning throughout this series, this is going to be this account number until we get funded or until we breach it. If we breach it, we're going to get another one. If we get funded, obviously, if you pass phase 1, they're going to give you another one. So the account number is obviously going to change at that point in time. Those are our credentials right there. If we go back to FundedNext on our dashboard, let's just go on our dashboard to confirm if we have everything on our dashboard. Active account is not showing there right now because I haven't signed in yet. So let's quickly go and sign in. We're just going to copy our trade number, FundedNext Server 2. Let's log into the account. We're going to click on File, log into Trade Account. I always like to use Open Trading Account. Then here we're just going to search on FundedNext. FundedNext. All right, that's it right there. FundedNext. We're going to click on Next. Okay, log into Trade Account, FundedNext Server 2. Let's just confirm our server. So FundedNext Server 2, correct? So FundedNext Server 2, log in. We're going to put there, we copy our password. So this is how you log into your trading account, guys. This is how you log into your trading account. Oh, that's it. We click on Finish. Perfect. Can you hear that sound? It means we are logged in, we are logged in, we are logged in. So that is it. This is our fresh account. You can see that in Ndemazeah Godlove, FundedNext Limited. Let's click on trade, $100,000. We are good to go. I just want to push this one up a little bit. Oh, it's fine like that. So that is it, guys. That is it. We can then close our MetaTrader 5 and go back to Trading View. Let's go to Trading View. Remember, we are already done with the first step, which is purchasing our account. We are now on step 2, which is logging into MT5, which we've also done that. Step 3 is going to be analyzing and taking our trade. And remember, our rules are simple. Part of our rule is we're not going to take more than 4 trades at a point in time because we're risking 1% per trade. So the reason why we're taking maximum of 4 trades at a time is so that even if the market doesn't go our way and we have to lose all those 4 trades, we only lost 4% of our account so that we don't breach the daily drawdown. I've actually gone down sometimes to even 92,000. I've actually lost 8% of my account, and I still come out of that drawdown. Subsequently, got funded and received a payout from that account. So don't be scared of a drawdown. As a Forex trader, you're going to have a drawdown. It's your ability to come out of that drawdown that determines if you are a serious or a real trader, or you are just a noise maker or a Forex influencer. So we are not scared of a drawdown because we know with our strategy, we have an edge that within a period of time, we're still going to be able to come out of that drawdown. We're still going to be able to get funded. So let's go to Trading View. Let's go to Trading View. We are set to go. The strategy we're going to be using here, GUMVRO. All right, we're going to be using GUMVRO. If you haven't watched that video, I made almost about 40 minutes teaching you guys GUMVRO strategy. Click the link above to watch that particular video, or just check GUMVRO on my channel. So that's the strategy we're going to be using throughout this particular video. So step 1, 2, and 3 is done. Step 4 now is analyzing and placing our trade. I already have my watch list on my trading view. So I do my analysis on trading view. Then when I want to place my trade, I just go now to MetaTrader 5 to place my trade. It's as easy as that. So we're going to start with gold. If we can start with gold, our 3-step process is simple. We're not going to be taking much time analyzing because the video is already there teaching you guys how to analyze your chart. So on gold, first step is to confirm the market direction. We already confirmed our market direction right there, that it was in an uptrend. And being in an uptrend, it means our FIB would have run from here to here just to see where it would have jumped into this particular trade. The market pushed down, it didn't get to our 38% level, so we are still playing the waiting game. And if this actually ends up as our most significant swing high, then we're going to be waiting for our FIB to push right down here to 38, 50% level of 61 for us to look for another buy opportunity. So we'll keep doing that until the moving averages now have switched to confirm to us that instead of an uptrend, we are now in a downtrend. We only want to trade in the direction of the trend. We only want to swim with the direction of the stream. We don't want to swim upstream. We don't want to catch a falling knife. Meaning if our indicators are telling us that the market is buying, we only want to look for buy opportunities. If it's telling us that the market is selling, we only want to look for a sell opportunities. And the reason why we're using our Fibonacci tool now is to see the level at which the market can retrace against us before resuming the original direction. All right, that's as easy as that. All right, so we're keeping it very simple. You'll be able to get more of this when you check out the GU-MVRO strategy. So on gold, that is what we are looking right here. We're just going to leave it like this, the way it is, so that we can always come back and look. And in some cases, I used to just even draw something like this to show what I'm actually looking. Or sometimes I put text, say maybe I can just put a text on the screen, say maybe waiting for pull back to FIBS levels. As easy as that, waiting for pullback to FIBS levels. So I can already know that if the market has to push back to my FIBS level, that's what I'm going to be looking for a buy. And in our case, our most significant swing low, we're just going to remove this one because most significant swing low is going to be here, and most significant swing high is going to be here or wherever we have our most recent swing. And our 38 is going to be there, 50 and that. So that's what I'm waiting. Let's go to Euro USD. I want us to at least take a trade or take a couple of trades. Wow. Look at Euro USD, something I'm seeing right here. Our most confirming our market direction. This was our market direction confirmed right there. We are in an uptrend. So where were we supposed to jump in this particular trend? At the close of this, at the cross of the moving averages, this would have confirmed. So you would have entered on a buy here. And even if you didn't enter on a buy here, we would have waited for the market to pull back and then close bullish. So let's see if the market did pull back to our most recent swing or to our FIBS level. Let's see. Yes, so the market did pull back to our 38% level and then close bullish. So we would have entered on a buy here, stop loss here, risk to reward of 1:2. We would have already been out of this trade. So since we would have already been out of the trade, when is a good time for us to jump in again? We're waiting for the market to now maybe continue to form another high, and then when it starts retracing against us, our FIB will then run from here to that high, and then we wait for the market to close bullish at our FIBS level. So we're waiting the same thing we had here, which is, I'm just going to copy this same one. Okay. So we're just going to copy everything that is here. This is the same thing we are waiting here on Euro USD. Okay. Or just waiting for my computer to load. So that's the same thing we're waiting for pullback to FIBS level. That's the same thing we are waiting. If that happens, and then our FIB is going to run from there to there, and then we're going to be looking for another buy opportunity. So in that case, my FIB has to run from my most recent swing low to my most recent swing high, which should be somewhere there. So more money is made in Forex trading waiting than actually trading. Don't think maybe just because you open your chart, you must press buy or sell. Not taking a trade is just another trade. That's something you guys need to understand, right? Not taking a trade is just another trade. USD JPY, what's popping, what's going on with USD JPY? Perfect. I can already see clearly the market cross here and it's been in an uptrend. So our FIBs running from here to here, we have already pushed right down to our 50% level, and by the close of the next bullish candle, we can be looking to take a buy trade. So for now, we are just playing the waiting game. We play the waiting game until when we confirm that the moving averages have then crossed when the fast moving average cross over the slow moving average from above. For now, we're just waiting again for the market to see. We're waiting for, instead of the market to push back to our FIPS level, we are waiting for the next bullish, bullish close. So that's what we are waiting. We are waiting for the next bullish close on that particular one. Great Britain Pound JPY, is it a similar pattern? Let's see if we're going to get a similar pattern. Yes, Great Britain Pound JPY, since it's still JPY, we're going to delete everything here. Still a similar pattern. Most significant swing, the market already crossed here. We are in an uptrend. Most significant swing low was there. Most significant swing high was there. So our feed is going to run from there to there, and we've already pushed right down to our 50% level. So next candle close is going to be our buy signal. So we're going to come back after an hour or two on this one just to check, waiting for next bullish candle close. Bullish candle close. That's it. Waiting for next bullish candle close on this particular one. I'm just going to put it here so that it shouldn't be on our way. Great Britain Pound card, let's see what's happening. We haven't actually seen a trade which we can take, so we're just going to keep analyzing. Let's delete everything here so that we can have a clean slide to work with. So this one, again, we've confirmed that we are in an uptrend. We had a cross right here. If we would have entered here, we would have already been out of this one. But now this is our most significant swing low, most significant swing high. If we have to plot our FIPS from here to here, you can see the market didn't even push down to our 38% level. So we're going to still play the waiting game to wait for the market, to push to our FIPS level. So this one is going to be just this one, waiting for pullback to FIPS level. The market needs to pull back here and then close bullish for us to enter on that trade. Great Britain Pound CHF. Let's delete everything so that we can have a clean. Again, we had a similar pattern. We've been in an uptrend on Great Britain Pound CHF for the longest. We had a cross here and the market has been in an uptrend. Most significant swing low has been here and our most significant swing high has been here. So if we have to draw our FIPS from here to here, we're going to be having what the market has already pushed right down to our FIPS level, and by the close of this bullish candle, this would have been our entry. So since we are still within, most of the time, our entry candle would have been this. So from here to here would have been the body of our entry candle, right? That's something I want you guys to understand. So since we are still within, since the price is still within the body of our entry candle, that's a good opportunity for us to still enter on this trade. This is what I'm saying. If we can have our entry candle like this, right? This is our entry candle. The high is there, the low is there. So long as the price hasn't broken our high and our low, is still inside here, we are still safe to buy or sell based on the direction of the market. So we're actually going to be buying Great Britain Pound CHF. First confirmation is we are in a buy trend. So let's go here on a long position. We're going to enter right here. Our stop loss is going to go below this swing right here. We're going to be risking, let's just risk 10 pips. Let's risk 10 pips. This is Great Britain Pound CHF. So we're going to be risking 10 pips on this one. And we're going to go with a risk to reward of 1:2. 1:2 is going to be, that's it. It's going to be right there. So our stop loss is 10 pips on this one. Let's quickly go and calculate the lot size we're going to be using on this particular one. And to calculate the lot size, we're going to use Godlove University. You go on Godlove University and you click on trading calculators to calculate the lot size. We already know 4 things. There are 4 things we need to know. First thing is the asset. All right. So the asset, our asset is Great Britain Pound CHF. Right. You need to know the account size. Account size, in our case, is 100K. To be able to calculate the lot size, these are the things you need to write down, the things you need to know. So we need the asset, we need the account size, we also need the percentage risk per trade, percentage risk, which in our case is 1%, and we need to know the stop loss in pips, all right, which is in our case is 10 pips. If you are doubting, you can quickly just go now to MetaTrader 5, open Great Britain Pound CHF. Let's open Great Britain Pound CHF. Great Britain Pound CHF. It's right there. Where is it? Let's filter this according to symbol. Great Britain pound CHF. This is it right here. Okay, we just need to open it, chart window. So let's go and be calculating the lot size in the meantime. You come to godloveuniversity.com, click on trading calculator. It's for free. It's a free tool for you guys to use. So don't think maybe you're going to pay anything. It's a free tool. If we can go to trading view, our stop loss is going to be what again? Our stop loss is going to be 10 pips. So we go there and we put our 10 pips. My internet is a little bit slow this morning, but that won't stop us. Okay, click here to get access. Let's see if we can cancel. Okay, good. So if they ask you to put your email to get access, just put your emails for free, just so they can prove that you're not a robot. And here we're just going to select Great Britain pound CHF. Great Britain pound CHF is going to be on top. Let's see. Great Britain pound CHF. There you go. USD, our account size is USD. Account balance, remember we purchased a $100,000. We're going to be risking 1% per trade, and the stop loss is 10 pips. So we click on calculate. Perfect. So that is it. You can see amount at the risk, $1,000. Sizing just stands for the lot size. So sizing in our case is 8.0 lot size. So we quickly go to MetaTrader 5, and on MetaTrader 5 and place our trade. Lot size is 8, and we click on buy. We're just going to confirm our one-click trading, and boom. Okay, I can hear the sound. So we just purchased Great Britain pound CHF. I'm just going to modify now so that we can put our stop loss and take profit. So stop loss is going to be 10 pips. So 10 pips is the same as 100, is the same as 100 points. And our take profit is obviously going to be 20. So we're going to put 21 pips, so just so we can account for the spread. So that is it. This one is already set up. If we can go right here, our trade is very, very visible and very, very clear. So that's our entry, that's our stop loss, that's our take profit. So that is it. We go to the next trade. We go to the next one. Great Britain pound NZD. Let's see if we have any trade on this one. Okay, we've been in a clear downtrend. So the market crossed right here, so this has been a downtrend. We are just waiting for the market now to form our most recent swing high, and the fib is going to run from here to here and wait for it to pull to our fibs level. So that's what we are waiting. I'm just going to do this and this. So waiting, we're still just waiting for a pullback to fibs level. So let's put our text just so we don't forget. Waiting for pullback to fibs level. If you continue pulling down anywhere, it starts pulling against the trend. That will be our most significant swing high at that point. So for now, we're just playing the waiting game. What's popping here? What's popping on this one is Euro JPY. Euro JPY, we already had a confirmation of our cross here. We are in an uptrend, and if this actually remains as our most significant swing high, then our fib is going to be running from our most significant swing low to most significant swing high. So waiting again for pullback to fibs level on Euro JPY. As simple as that. Waiting for pullback to fibs level. Okay, that is it. I'm just going to put it somewhere I can easily see. Euro Great Britain pound, what's popping, my guy? What's popping? Okay, I can see confirmation of a cross here. We are a little bit late. This cross was confirmed at the close of this candle, so we are already late a little bit. We would have entered on the buy exactly here. So for now, we're just going to wait for the market now to push up and then form our most recent swing high, and then our fib can run from there to there. So I'm just going to plot this to here, to wheresoever our most significant swing high is formed, and that will be the case. So that is that, waiting for pullback to fibs level. And remember, I just said this because the market is still pushing up. If it breaks this area, wheresoever it starts pulling against us will be now our most recent swing high at that point. Euro AUD, what's popping? The same thing. There are not too many setups in the market. Euro AUD was right there. And if we can just confirm right here, our most recent swing high was here, and our most recent swing low, if this has to end as our most recent swing low, our fib is going to be running from here to here. So again, we're waiting for the same thing. There's nothing we can do now. More money is made waiting than actually trading. Don't think the more trades you are pressing, the more you're pressing things on your computer, the more money you're going to be making. No, exercise patience and wait for your setups to come to you. Eurocard. Ooh, I can see this was a clear trade we're supposed to enter right here. That was a clear trade because if we can run our fibs from here to here, you would have seen very, very clearly that the market did push down to our 38% level and then close bullish. So this would have been a buy right there. So since we already missed that one, we're just waiting for the same thing. This will now be acting as our most recent swing low. And wheresoever the market starts turning against us, will act as our most recent swing high. And then our fib is going to run obviously from there to that point and wait for a pullback to our fibs level and then close bullish. So waiting for the same thing on this particular one. So you see, we've analyzed almost about 10 currency pairs or 10 assets, and we've only gotten one setup to take. The rest we're just waiting. We're waiting for that setup to play out. The same thing, I don't even need to go far. This is the same thing. We are waiting on this one for the market to do what? Pull back to our fibs level because we had our cross here. The market has been going down. If this has to close as our most recent swing high, our fib is definitely going to run from most recent swing low to most recent swing high, and then we wait for the market to then push back to either this level, this, or this for us to get an entry on a sell direction. That is it. So which one? Okay, Euro CHF. Woo, look at those wicks. We had a cross confirming an uptrend right down here. That's where we had a cross, and we've been in an uptrend. So again, our most recent swing low is going to be this area right here. It's going to be this area, and our most recent swing high is that area. So we can plot from this area to this one. And then the market has already pushed down to our fibs level and closed bullish. So I'm seeing a buy opportunity here, but just the size of this candle, I'm already having a feeling that this market is already overbought. All right, this market is already getting overbought. So I can just play the waiting game a little bit. Let's play the waiting game a little bit on this particular one. All right, let's play the waiting game a little bit because I have a feeling we are already a little bit late. Just this is enough for us to be late. So we are a little bit late on that one. USD card, what's popping. Let's delete all of this. You can see there's a lot of activity going on here. This was the cross of the candle. By the close of this candle, this would have confirmed a cross. So at this point in time, we're just waiting now for our fibs level. The cross has actually happened. This is our most significant swing low. And if this is closing as our most significant swing high, then let's see where our fib is going to run. Let's see. I'm just going to push this up. It's actually on the way. So our fib is definitely going to run from here. So most significant swing low, most significant swing high is going to be here. I'm waiting for the market to push back to this area right here. But I'm seeing this is a major swing on its own. This is a major swing. So long as I have 1, 2, 3, 4 candles pushing against the trend and then resuming the trend, that forms a swing on its own. So without being so judgmental, this is going to be our most recent swing low, and that will be our most recent swing high. So let's give it some time, wait for the market to play out for us to look for an entry. Okay? Remember, we're going to come back after an hour or 2 or 3 hours just to come and see if what we're waiting has actually played out. This one is the same thing. We've already confirmed a downtrend here. This is our most recent swing low, most recent swing high, and our fib is definitely going to run from there to wherever we're going to have our most recent swing high, and then wait for the market to pull back to our fibs level. That's it. Waiting for the market to pull back to fibs levels. Then AUD USD. Unfortunately, or fortunately, if you do your analysis sometimes and you don't see setups, maybe it's been fortunate. Fortunately or unfortunately, we haven't seen too many setups, but we're just going to keep doing and following our rules. So AUD USD, load up. Let's see what we have here. Perfect. Look at another setup we missed right here. This is so aching to miss a setup. Look at this setup. This would have been a buy trade right here. But anyway, it is what it is. It is what it is. We had our cross right there. The market has, so this would have been our entry right here. So we are already a little bit late. But if the market has, this will now be acting as our most significant swing low, waiting for the market to form swing high, and our fib is definitely going to run from there to wheresoever our swing high is going to be, and then we'll wait for the market to pull back to the fibs level. So same thing, same thing. ADCHF, ADCHF, okay, same thing, same thing. Unfortunately, there are not too many setups for us to take. This would have been a clear entry right here, right here, right here, right here, because if we would have run our fibs from here to here, you can see this was a clear 38% level and then closing bullish. This would have been a clear entry, and boom, we hit our TP after that. Since the market is already going in our favor, or still in the direction of the trend, this will be now our most significant swing low is here. Okay, let's delete that. Most significant swing low is there, and wheresoever the market forms the most significant swing high, our fib is definitely going to run from there to that point and wait for a pullback. Voila! Nothing more than that. Nothing more than that. So we're just playing the waiting game at this point in time. Let's put our text on this one and move to the next one. AUDJPY, what's popping? The same thing. The same thing, same thing, same thing, same thing, same thing. This would have been our clear entry. We've missed it a little bit. So since we've missed it, this is now our most recent swing low. And wheresoever the market forms the most recent swing high, our fib is going to run from that point to that point, and then wait for a pullback to our fibs level, and then closing bullish for us to look for a buy setup. Clean, 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 clean setups. Clean setups. There's one question we're going to ask ourselves: if this challenge doesn't go our way, if we end up losing our challenge, our account at a point in time, which that can happen, this is trading. The only question we're going to ask ourselves is, did we follow our trading plan? That is it. If we can ask ourselves and the answer is yes, then boom, that is it. We're going to buy another one immediately and continue going. All right, which one is this? Australian dollar, New Zealand. Oh, I can see something already. This is a clear cross right here. Clear cross. I can see sell setup. You can see sell setup on this one. Remember, this was a clear cross right here. The market came right down here. This pullback would have been our clear fibs, and then our most significant swing low is there, most significant swing high. So we can draw our fibs from here to here. Then the market has already pushed back to our 38% level and then closed bearish. So we're going to be entering on a sell right here. Stop loss is going to go just here, and we go for a risk to reward of 1:2. That's another trade we've just seen. So our sell is going to be there. Stop loss is going to go right here on 10 pips again. Let's risk 10 pips on this one, or let's risk 8 pips on this one. We're not going to be risking that much. Let's risk 8 pips on that one, and then we go for a risk to reward of 1:2, meaning this is going to be our TP right here. All right, that's it. That's it. That's it. Let's go and quickly calculate our risks. So this one is going to be AUDNZD. The only thing with this one is just the spreads are a little bit crazy on most of this spread. AUDNZD, that is it. We're risking again 1%, and let's just put our stop loss on 9 pips, guys. So the lot size is going to be 18.6. Yes, that is it. 18.6 lot size. Can you see this one? We are up in profit by almost about $500 already. Almost about 0.5% of our account, while we are even still analyzing, okay? Let's minimize this one. Let's quickly minimize this one. Let's minimize it. Okay, just minimizing it. And then AUDNZD is right here. That's our AUDNZD. We're going to put, what's our lot size again? Lot size is 18.6. It is what it is. Different currencies have different lot size values. So 18.6. We're going to put there 18.6. And we're going to close. Was it a buy or a sell? Let's go back with a sell. Clear sell. So we're going to be hitting on sell on this particular one. So let's go. Let's click on sell. We're going to be following our what? we're going to be following our system. Ooh, look at the spread. Just hitting on sell, we've already paid almost about $200 in spreads. And in a way, different currency pairs just have different spreads value. Let's quickly go and modify. So this one, we're going to be risking again 9 pips. We're going to be risking 9 pips. Did we actually put 9 pips is the same? Then we're going to be going for 18 pips, which I always like to add 1 pip so that I can account for our spread. So 19, or let's just put the 20 pips. Let's go for 19 pips. So that is it. That's it. Let's go this side and see. So that's our entry right there. That's our stop loss. That's our take profit. So that is it. If it doesn't go our way, we're all going to lose 1% on that trade. And if it goes our way, we're going to make 2%. Okay, trading view, do we still have other opportunity? Remember, the max we can take without a buffer is 4 trade. AD card, we already missed the setup again right here. This is where we would have gotten into this trade. So for now, our FIB is obviously going to run from most recent swing low is here. So wheresoever we have our most recent swing high, that's where our FIB is going to be running. From here to wherever we have our most recent swing high. Let's put our text. Waiting for pullback to FIB's level. That's it. Then CAD JPY. Ooh, I can see a nice cross right there. Nice buy, nice buy. By the close of this candle, we're supposed to be confirming this cross. So since the price is still within this price range, within this candle range, as I explained earlier, we're going to be taking a buy. Without thinking twice, without thinking too much, we're going to be taking a buy on that one. So we're going to go on a buy right there. Stop loss is just going to go here. Let's risk about 16 pips on this one. Let's risk about 17 pips on that one and go for a risk to reward of 1:2, right? So we're risking 17 pips on CAD JPY. On CAD JPY, if it doesn't go our way, this will be the next area we're going to be targeting. So that is it. Well, let's put it on 18 pips. We're going to be risking 18 pips on this one. 18 pips, and we go for risk to reward of 1:2. So let's quickly go and calculate CAD JPY. Okay, CAD JPY is right there. Stop loss is 18 pips, and then we calculate. So our lot size is 8.3. So we're going to be using 8.3 lot size on CAD JPY. CAD JPY, let's minimize this. Where is CAD JPY? Where are you? I need to come and arrange my currency pairs again. So CAD JPY is right there. And we're going to be risking, without taking much time, is 8. What was our lot size again? 8.3 lot size, and it was a buy, right? Good. That is it. We're going to minimize it. And then let's quickly arrange the stop loss and the take profit. Modify. Stop loss is 18 pips, which is 180 points. Take profit is going to be 2 times that. 18 times 2, let's see. It's going to be 36. 18 times 2 is 36. So we're going to put 37, just so we can account for the spread. Boom, we are set. We are set. Next one on our list, let's go. So up for a buy, where is that emoji? I like to always put that emoji, that buy emoji. Okay. Where is that money emoji? I like that money one. There you go. Okay, so it shows that we are on a buy on this one. It shows that we are on a buy. So anytime I just open the chart and I look at that emoji, it shows that we are on a buy on that one, and you can see clearly we are moving into the money. CAD CHF, what's popping? Okay, CAD CHF, we had our cross right there. Most significant swing low to most significant swing high. We're going to be running from there to there. So we're waiting for the market to pull to our FIBS levels on CAD CHF. That's it. NZD USD. Ooh, we missed this setup right there. So without even taking much time, again, our FIB is definitely going to run from here to wheresoever the market start turning against us, and we're going to do this. We're just going to do boom, waiting for a pullback to FIBS level. NZD CAD, similar pattern. That is it. Our entry was supposed to be there. So the same thing, most significant swing low to most significant swing high. Our most significant swing low is definitely going to be from here to wheresoever the market start turning against us, and then FIB is going to run from there to there. We're just doing the same thing. Boom. That's it. Okay, I can already, I was just checking the battery on my camera, and we're still safe. We're still safe, guys. We're still safe. We're going to be rounding up on this episode very soon. NZD-CHF. We're going to be going to indices. Remember, we're going to touch on everything. So without even taking much time on this one, I can already see what's happening. US 100. Woo. This was our cross right here on US 100. We've confirmed a buy from here. Most significant swing low is there. Most significant swing high is there. So FIBS is going to run from there to there. We're going to wait for the market to push to here, here, or here, this area, and then close bullish for us to get a buy opportunity. So the same thing, waiting for market to pull back to FIBS levels. And if it doesn't pull back to our FIBS level and continue going up and break this recent high, then the next high is going to form. Is going to be our next most significant swing high, and this one will be acting as our most significant swing low. USD 30, similar pattern. Let's delete everything that's here. You can see everything is good. A lot is going on here, and let's see. FIBS cross was moving average cross was there to confirm our uptrend. Most significant swing low is there. Most significant swing high is there. FIB is running from here to here. So for now, we're just playing the waiting game for the market to pull back to this FIBS level for us to look for another buy opportunity. There you go. So another one I want us to check is US 500. US 500, where is it? Oh, I was like even BTC. I also trade BTC on. I like this. I can see a buy on BTC because we had this cross right here. I'm going to show you guys really quick. Where is our? We had this cross which confirmed our uptrend, all right? And then after confirming our uptrend, you can see our most significant swing high would have been here. That's our most significant swing high. So we can run our FIB from here to here. You can see the market has pushed down to even our 61% level. So if it can close, waiting for this one, the only thing we are waiting for next bullish candle close. That's what we're waiting for. Next bullish candle close. If it's in the direction of on the next bullish candle close, that is it. It's going to be confirming a buy because we've pushed back to our FIBS level. We're going to enter and buy. Stop loss will go somewhere here, and we go for a risk to reward of 1:2. So that's what we are waiting for now. We're going to come back again maybe after an hour or maybe in a couple of minutes. It's going to be 12 noon. And if this candle actually closes bullish, then we're going to enter in on a buy. Stop loss will go somewhere here. Risk to reward of 1:2. So that is it. I would have checked. The last one I just want us to check is US 500. German 30. German 30. That's beginning to be one of my favorite to trade. German 40 is also here. Okay, I think it's here. It's DE40 or German 40. German 40 or DE40. German 40, I like to just use DE40. DE40 is right here, so we can use this one. Let's put it on plus. Let's add it to our market wash. And then we're also going to check US 500. US 500. We're going to add it to our market wash. Good. So let's quickly check on German 40 to see what's happening. Wow. We already missed. Look at this. We had a cross right down here. German 40 has been crazy, has been on a bullish trend for the longest. So our FIB is definitely going to run from here to here. So if the market can push back to here, and then close bullish, that's when we're going to be looking for a buy on German 40. All right. That's what we're going to be looking for, a buy. So let me just put my text again. and it's the same thing we are waiting for, which is for price to push to our fifth level to give us a buy entry. US 500, US 500, similar pattern, all indices, similar pattern, similar pattern, similar pattern. Cross right down here. Our most significant swing low, significant swing high, fifths run from here to here. And you can see this area, the price didn't even push down to our 38% level. So we're going to play the waiting game, which that waiting game is this. Waiting for market to push back to our fifth level, or if it doesn't push back and break this area, we're going to be waiting for the next high. As easy as that. We've gone through all the pairs across commodity indices, FX pairs, German 40, and all of that. So that is that, guys. Fortunately, we've only had a total of 3 trades to take. We're gonna come back after a couple of hours. Look at this. We are up with almost about $400. That's 0.4% of our account. That's good. But like I said, we already have our stop loss plan, our take profit plan. And if all these 4 trades don't go our way, we're going to be losing 3%. If all these 3 trades don't go our way, we're going to be losing 3% of our account. And if they all go our way, we're going to be making about 6% of our account. But even if we come here and we have a 50%, we have even a 60% win rate, where only one hits our TP and we lost 2. It means we're going to be making 2% and losing 2%. So we're going to be at break even. We're not going to lose anything. Or if fortunately, 2 hit our TP and we lost 1, we're going to be making 4% and lost 1%. We're going to make 3% of our account. You see, what I'm very confident is it's going to be very rare for me to hit 3 stop losses on all these trades. So I'm already happy. I'm already having that bias to know that no matter what happens, I will still be able to end at break even. Because even if 2 hit my stop loss and only one hit my TP, I've already done the math for you guys to see. I will still close the day at break even. So we're going to be coming back on the next video. This one has been long enough. So on our next episode, we're going to be going through all these trades we took, and then we're also going to be going through the lessons we learned, and after that, we're going to be taking a couple of more trades. So make sure you are following this series, guys. Let me know your thoughts on the comment section. Let me know which particular lesson you learned much on this particular video. Let me know what you want to see me emphasizing more on our next episode, and check the playlist. I'm going to leave the playlist here of all the videos on this particular episode. So make sure you are checking, you make sure you are following that particular playlist. Join my free Telegram, link on the video description. And if you want to use my recommended profile, use the code Godlove10 or at checkout on FundedNext, and you have 10% off your purchase. Join my free Telegram community. Join my mentorship program at Godlove University if you want me to teach you one-on-one. And I'll see you guys on these other videos. Peace.